The head and shoulders pattern gets taught on literally every trading course on the planet, and it drives me insane because head and shoulders, or the pattern itself, means absolutely nothing unless it sits in context of higher time frame AMD. The head and shoulders pattern is the manipulation of a higher time frame candle, and that triggers distribution. So when you see this pattern on your charts, it only works when you're trading or inadvertently trading higher time frame AMD. So that's actually what you need to be looking for, and that will get you into consistent high probability trades like this 3.24R that played out perfectly on EURGBP. So I'm going to show you exactly what's going on and why your head and shoulders patterns work and don't work. So let's just take this away and look at what we're seeing here. This is a blank 12-hour price chart. So we're swing trading in this example. So we're looking at 12-hour execution in line with higher time frame candle behavior. So that is weekly candles, 2 weekly candles, and monthly candles. So the first thing we need to do is overlay those candles, because this in isolation means nothing. Any pattern we see here means nothing. So let's just do that. I'm going to overlay for simplicity the 2-week time frame. So this is our 12-hour price action, and behind this we see the entire candle ranges for a 2-week period. So what we see is that price in this 2-week candle broke below and closed below the previous low. So at the formation of this candle, we're expecting lower prices. What do we then see? Price immediately runs into or liquidates the previous monthly low. So this is a head and shoulders pattern as you used to see it. Take away the candles for a second. We have left shoulder, head, breaking below the previous low, then a right shoulder, which respects the head and then breaks in the opposing direction. Why does this work? Because it's a higher time frame candle liquidation. So what price is actually doing is it's running into a previous candle's low. So we see a break below the low, a close inside, we then retest the level. What are we actually retesting? It is the order block. So this is the last sell here, the sell candle before the buy. Price retraces in, then breaks away. Where is the target? Well, if this candle closes, this turns into a manipulation candle. We have accumulation over 2 weeks. Price is now manipulating, and then it will distribute to where? The target, which is the high of the accumulation candle, AMD. Then what happens next? Price runs into the previous 2-week candle range. So when we're distributing to this target, price is also liquidating the external range liquidity at the high of this candle and this candle. So when we see then price retesting this area, what is it doing? It's closing here, confirming the manipulation, and then it will distribute to where? The low of the accumulation candle. Accumulation, manipulation, distribution. So we can call this a head and shoulders pattern. Here we have the left shoulder, here we have the head, then we have a right shoulder and distribution. But the head and shoulders pattern means absolutely nothing. What this is accumulation, manipulation, then confirmation when this candle closes, distribution to the low. So how do you actually trade this? How do you get involved? Well, what you do is you wait for internal range liquidity. So as soon as this candle closes and confirms, we can then start to see what's happening in our 12-hour price action. So you get sell to buy, then we just need to wait. Price starts to dump, and you see this is the last buy to sell. So that becomes the order block. We're not trading head and shoulders patterns. We're trading structure, proper market structure. So you can enter from the formation of the order block, the last buy before the sell, cover the high, and you have a confirmed target in the market, which is the low of what? The accumulation candle. So price tags, dumps, Then we retrace into more internal range liquidity. This is a bearish fair value gap. Price then dumps again. This is how you get exceptionally clean swing trades. Why else does this work? Let's overlay the monthly candle. At this point here, we were manipulating a previous monthly candle range. Price is then distributing to the high. However, price runs into this monthly candle and actually manipulates and just dumps to the low. So again, head and shoulders patterns in context of higher time frame candle behavior. Forget head and shoulders, start trading AMD, accumulation, manipulation, distribution. I teach this over 30 videos for free on my YouTube channel. Start trading AMD the right way. See you on the next one.